Welcome back, everyone, and thank you for joining us today. If you are a homeowner, a Medicare beneficiary, a retiree, or someone preparing for retirement, I want you to stay with me until the very end of this discussion, because what we are going to talk about today could have a significant impact on your finances, your healthcare, your home, and your peace of mind in the years ahead. For many Americans, retirement was supposed to be the reward after decades of hard work. It was supposed to be the stage of life where financial uncertainty gradually faded away. People worked for 30 or 40 years, believing that if they paid their taxes, contributed to Social Security, maintained insurance coverage, saved what they could, and followed the rules, they would eventually reach a point where life became more predictable. Yet for millions of seniors today, the exact opposite seems to be happening. Instead of becoming simpler, retirement is becoming increasingly complicated. Every year seems to bring new regulations, new insurance policies, new healthcare requirements, new enrollment rules, rising costs, and unexpected financial challenges. Many retirees feel as though they are spending more time trying to understand benefits, compare plans, read policy documents, and manage expenses than ever before. One of the biggest concerns emerging in 2026 involves the growing intersection between technology, insurance, healthcare, and retirement security. For decades, homeowners generally knew how insurance worked. A company issued a policy, the homeowner paid premiums. If damage occurred, a claim was filed and reviewed. While the process was never perfect, most people understood the basic system. Today, however, the system is changing rapidly. Insurance companies now have access to tools that would have seemed unimaginable just a few decades ago. Advanced artificial intelligence programs can analyze massive amounts of information in seconds. Satellite imagery can capture detailed views of properties from above. Aerial photography can provide insurers with information about homes without anyone ever visiting the property. These technologies are often promoted as ways to improve efficiency and accuracy. Companies argue that they help identify risks, streamline operations, and reduce costs. But many homeowners are beginning to ask an important question. Who is making the decisions? Is it a person who has actually inspected the property? Or is it a computer system evaluating images and data points from hundreds or thousands of miles away? This question matters because technology is not perfect. A homeowner may spend years maintaining a property, only to receive a notice suggesting that a roof appears damaged or that certain conditions create unacceptable risk. The homeowner may be confused because they know the roof is in good condition. They may have recently completed repairs. They may have hired professionals who inspected the property and found no serious concerns. Yet somehow, a computer-generated assessment raises questions that suddenly place insurance coverage at risk. For retirees, situations like these can be especially stressful. Unlike younger homeowners, who may still be working and generating substantial income, many retirees live on fixed budgets. Every expense matters. Every increase in premiums matters. Every unexpected bill matters. When a homeowner in retirement receives a notice requiring costly repairs or faces the possibility of losing coverage, the financial consequences can be significant. Many retirees have spent years carefully managing their savings. They budget for groceries, utilities, healthcare expenses, medications, property taxes, and insurance costs. Unexpected expenses can quickly disrupt those plans. A roof replacement that costs $10,000 or more is not a small inconvenience. A major insurance premium increase is not merely frustrating. For some households, these events can fundamentally alter retirement finances. What makes the situation even more difficult is that insurance markets in many parts of the country are already experiencing tremendous pressure. Natural disasters have become more expensive. Construction costs have increased. Labor shortages have affected repair expenses. Inflation has driven up the price of materials. As a result, insurers have become more cautious. Many companies are reassessing risks, revising policies, and tightening underwriting standards. Unfortunately, homeowners often discover these changes only after they have already taken effect. The challenge extends beyond home insurance. Healthcare remains one of the largest financial concerns facing retirees. Many Americans enter retirement believing Medicare will cover most of their healthcare needs. While Medicare provides incredibly important protection, the reality is often more complicated than people expect. Healthcare expenses continue to rise. Prescription drug costs remain a major concern for many households. Specialist visits, diagnostic tests, outpatient procedures, dental services, vision care, hearing assistance, and long-term care needs can all create significant financial burdens. This is one reason why Medicare Advantage plans became so popular. Many seniors were attracted by the additional benefits these plans offered: vision coverage, dental services, fitness programs, transportation assistance, meal benefits, over-the-counter allowances, wellness programs, various forms of supplemental support. These benefits became important parts of everyday life for millions of older Americans. However, many beneficiaries are learning that Medicare plans can change from year to year. Benefits may be adjusted. Provider networks may change. Eligibility requirements may be modified. Coverage rules may evolve. What existed last year may not look exactly the same this year. That reality surprises many seniors. After all, once people become comfortable with a healthcare plan, they naturally assume the benefits they rely on will remain available. But healthcare systems are constantly evolving. Insurance providers negotiate contracts. Costs change. Government regulations change. Market conditions change. As a result, retirees who fail to review their coverage regularly may find themselves facing unexpected surprises. The broader issue here is not simply insurance or Medicare. The broader issue is uncertainty. Retirement planning has always involved uncertainty to some degree. Nobody can predict the future perfectly. Nobody knows exactly how long they will live, what healthcare needs they will face, or what economic conditions will look like decades from now. But many experts believe uncertainty itself has become one of the defining characteristics of modern retirement. People are living longer, medical technology continues advancing, economic conditions change rapidly, inflation remains a concern, healthcare systems evolve, insurance industries adapt, government programs face financial pressures. All of these factors combine to create an environment where staying informed has become more important than ever before. Many financial advisors frequently emphasize that retirement is no longer a destination. It is an ongoing process. In previous generations, retirement planning often focused primarily on reaching a specific age and accumulating sufficient savings. Today, retirement requires continuous management. Plans must be reviewed. Budgets must be updated. Coverage must be monitored. Benefits must be evaluated. Expenses must be tracked. Financial strategies must evolve. The retirees who adapt successfully are often those who remain engaged with their finances, rather than assuming everything will remain unchanged. Consider how dramatically the world has changed during the last 20 years alone. Technology transformed communication. Healthcare delivery evolved. Financial markets experienced historic volatility. Interest rates moved through extraordinary cycles. Inflation surged after long periods of relative stability. Insurance costs increased in many regions. Housing values rose dramatically. Each of these developments affected retirees in different ways. Now imagine what the next 10 or 20 years might bring. No one knows with certainty. This is precisely why experts repeatedly encourage retirees to focus on flexibility. Flexibility allows individuals to respond to changing circumstances. Flexibility creates options. Flexibility reduces vulnerability. A retiree who understands their expenses, monitors their benefits, and regularly reviews financial plans is often far better positioned to navigate challenges than someone who assumes everything will remain the same indefinitely. Another important issue involves information itself. We live in an era where information is available everywhere. News headlines appear constantly, social media platforms generate endless discussions, television programs analyze policy changes, financial commentators offer predictions, experts debate potential outcomes. Yet, despite having access to more information than ever before, many people still struggle to determine what truly matters. This creates a paradox. The challenge is no longer finding information. The challenge is identifying reliable information and understanding how it applies to individual circumstances. For seniors, this can be particularly difficult. One headline may suggest dramatic changes are coming. Another may offer a completely different perspective. One commentator predicts major disruptions. Another predicts stability. The result is confusion. This is why many professionals recommend focusing on facts rather than fear. Understand your specific insurance policy. Understand your specific Medicare plan. Understand your specific financial situation. Review official documents. Ask questions. Verify information. Avoid making major decisions based solely on headlines. The goal is not to ignore risks. The goal is to respond thoughtfully rather than emotionally. Fear often leads to poor decisions. Preparation leads to better decisions. The most financially secure retirees are not necessarily the wealthiest retirees. In many cases, they are simply the most informed. They know their expenses. They understand their benefits. They monitor changes. They plan ahead. They adjust when necessary. And they recognize that financial security is built through consistent attention rather than one-time decisions. As we move deeper into 2026, millions of Americans will continue facing important questions about insurance, healthcare, retirement planning, and financial stability. Some will receive notices from insurance companies. Some will review Medicare documents. Some will reconsider retirement budgets. Some will evaluate healthcare options. Others will simply try to understand what changing economic conditions mean for their future. Regardless of individual circumstances, one principle remains remarkably consistent. Knowledge is power. The more informed you are, the more prepared you become. The more prepared you become, the more confident you feel. And confidence is incredibly valuable during times of uncertainty. No one can eliminate every risk. No one can predict every future development. No one can guarantee that policies, benefits, costs, or regulations will never change. But individuals can take meaningful steps to strengthen their position. They can stay informed. They can review their coverage. They can ask questions. They can seek professional guidance when necessary. They can prepare for multiple possibilities rather than relying on a single assumption about the future. In the end, retirement is not simply about money. It is about independence. It is about security. It is about maintaining control over your life and your decisions. And the more informed you become about the systems that affect your finances, your healthcare, your insurance, and your future, the stronger that control becomes. Thank you for spending this time with us today. If you found this discussion valuable, consider subscribing to the channel and turning on notifications so you never miss important updates affecting seniors, retirees, Medicare beneficiaries, homeowners, and anyone planning for financial security in retirement. Share this information with friends and family members who may benefit from understanding these changes. The more informed we are, the better prepared we become for whatever the future may bring. Thank you for watching, and we look forward to seeing you again in the next video.